Hey guys, welcome to a new video. This is our first price analysis, price review, market review, and we're going to be starting with the day that we went up into this new week opening gap after we went very far down through this weekly busy, and we're just going to go through it. And first of all, I'd like to first map out the gradient levels of this weekly busy and do this with the fib tool. Gradient levels went up from 25, 75, 50. And as you can see here, we did respect that going on later. We also respected it here. Okay, so yeah, we have these levels mapped out, and we refer to these levels. This is what ICT has taught us in its most recent, I'd say the 2023 mentorship. I've seen this more than anything else. But I think this was a great week to be in price action. And if you weren't in it, that's okay. Just sit tight. There's going to be more opportunities coming. So basically my strategy is the Silver Bullet and the one trading setup for life. That type of strategy where it's looking for a market structure shift in the direction that we anticipated to go. So if we anticipate price to get into this new day opening gap, we expect that to happen. And we also expect price to use that as resistance and then go downwards for possible London sell side liquidity. And that is exactly what we did. And not all the time does it actually do what we want it to do, but this time it really did. It did a great job of doing that. So when I was trading this particular morning, which was Thursday, again, I saw this happen and I entered on this fair value gap and I rode it all the way up until about either 25% or 50%. And then I waited for price to gravitate downwards for that market structure shift. And as soon as it broke this low right here, that'll be a market structure shift. And then we would wait for it to enter a fair value gap. And you could either enter on this order block right here or this breaker, the top of the breaker, which would be actually right here. That would be ideal. So this breaker, which is the down close candle, which could be the body, and also the wick, obviously. But this is on a 1 minute time frame, so we can be more lenient. But we did respect it here, and this would have been a great time to enter, which I did. And I basically wrote it down here. I wrote it past this low and then entered again once it came up again. And then once it took out these relative equal lows, then I was out. So these relative equal lows, one right here and one right here, those are relative equal lows. I took profits right there. Now, I did trade a little bit more. This was on another ticker. It was pretty sure it was the micro. I'm pretty sure that's what it's called. But I also entered here as well, and I took a little bit more profits, and that was basically the end of it for me. So like once I make money and I make a certain amount on my mini, once I make enough money on the mini contract, which is much more risky in terms of the value per tick, then I'll move to something less risky, which is the micro contracts, which are pretty sure these are $5 per tick possibly, and the mini is $20 per tick if I'm not mistaken. I may be wrong. I'll fix that if I'm wrong. But here was another market structure shift, and then we retraced into a fair value gap, bearish fair value gap, and we continued downwards. And this was possibly retracing into this order block over here, which is very small, I know. But these are actually like real price action moves that you can come back and see like what exactly we were priced to. And that could be even a bullish breaker, because you got a high, low, high, lower, low. And this could be the breaker right here, this candle right here. And it seems like we respected, those two candles right there. We did respect it. So yeah, possibly, but I mean, it's kind of hard to see that, if you're on the 1 minute, you're just seeing this, but if you have two charts lined up, which I don't right now, and that's to make sure that this is actually like a productive session. We don't have two screens going on at once, and your eyes are drifting off. I'd rather keep this simple. But yeah. So this is explaining kind of how I made money on that opening bell, and you'll see in a second. Once we go over to Friday's price action, the opening bell is not ideal, especially if there's like news around it. I didn't trade the news. It was just the opening bell itself. It was very volatile, and I learned the hard way. And you'll see on Friday, how I learned the hard way, and it's just not ideal. If I were to recommend for anyone, don't go for that opening bell. Just make sure you're waiting until the silver bullet hour. Don't be like me and think like, oh, like, it worked one time, so it can work every other time. No, like, it's a very tricky place to be in. So I rather admit that to you guys than, live in my own fucking delusion. So yeah. So if I waited, I could have just waited till this fair value gap and still wrote it down until even this order block right here, or just go for the 10 points like we usually do. So you just got to be careful in this game. You got to be careful. It's a very tricky place to be. So we took London sell side already at this point, and we'll see here PM session, so 2 o'clock. So there might have been an entry point here. So let's see. These are order blocks. This is a whole entire fair value gap right here. So that's an entry point. And what would we aim for? I would be aiming for this, but again, we're only looking for 10 points. But when we do trade, ICT says that we want to have at least, I think he was saying 12 to 15 or 15 to 20 points available. So here, obviously, there's way more than that, available to us. And also, we had another entry up here, and this is again, we're on the 1 minute time frame. There's several entries as well. So we have this order block as well. We want to see down close candles be respected. If we draw back into it, we expect it to be respected. Just keep it simple. And up here, I noticed that with the 15-minute time frame, this was respecting the 15-minute breaker of some sorts. We'll look at that in a second. But there's the PM session, PM Silver Bullet. So PM Silver Bullet from 2 to 3. There's that. And I did not trade the PM session. I just took my money for the day and went about my day. But I did come back to this and look at how price respected it. So seeing these seeing these new day opening gaps, these are much larger than usual. So I've been marking them out. Usually I wouldn't, but they've been much larger than usual. So I guess, in my opinion, they'll be a much bigger priority. And that's just my opinion. I may not be right on that, but that was how I was experiencing it. So up here, first, this is Friday, right? So Friday is the thank God it's Friday, TGIF Friday setup. So to conceptualize this, we would go to the weekly time frame. Slow that down. I get rid of. Actually, I'll just keep it for now. So we would take our Fibonacci tool, and on Mac it's Command. On Windows it's Control on your keyboard. I'll hold down Command. I'll bring my cursor up to the top of this candle, so just to make sure that it locks on to that top, in the very top of it. And I'll go down and I'll hold Command again. You see how it's basically snapping on to either the candle body low or the actual low. Then I'll just add it to the bottom of there as well. And I have a template for a TGIF, and it is the 20 to 30% levels that we'll be looking for. And I'll just magnify these a little bit if I can. Okay, so yeah, I'll just keep it like that. All right, now we'll go back to the 15-minute. So we just took the 20 to 30% range of the weekly range, which is the entire weekly candle, and we expect price to retrace 20 to 30%. That's exactly what we are doing. We expect it to retrace. So we already did that basically in the before the opening bell. We're getting into it here, and in my opinion, if we get there first, we may not even, go to the 30% level, but it seems that, we were pretty hastily trying to get there. So my mistake was, expecting that we don't continue forward and that we take out this sell side liquidity here first. So what I was looking at here was that, I wanted to see this get taken out first and then go up. But that wasn't, it didn't really make that much sense, because if we wanted to engineer more liquidity, like if we were the market makers, we would want people to really think that this was just going to continue upwards. Because if we wanted to retrace to 30%, we really don't want to go much higher, right? Because, that's a strategy. And if we were to go higher, we would use 75% as resistance so that we can build the sentiment that, oh, okay, this must be support, supply levels, or whatever that would be in retail, like rat race mindset. We wanted them to think that, okay, this is definitely, support and supply. So it's not going down, and they're probably like quivering and shaking and, trying to get in at these moments and continuing to want to get in. They're like, oh, it's like a retracement. Oh, like keep buying, it's gonna keep going. And then they just slam it down, right? And that just, as they went up more, they just built more liquidity to go downwards. So, I think I was a little bit, how can I put this? I had tunnel vision, but on the wrong thing. So I got chopped up the most in here, right? And I was expecting, after we took London buy side already, just right here. Yeah, so we took London buy side. Up here. So usually after we take London buy side, I expect price to shortly after go for sell side, London sell side. And of course we already took that, right?